Hello value investors, thank you for joining me. In today's video we're going to talk about the power of uncertainty and how to factor in a margin of safety. So if you're new to the channel, please subscribe now. This is our value investing journey. I hope you find this video useful. Let's get started. So I've just looked and compared the Russell 2000 with the S&P 500, and you can see that there's a very large gap here between the larger companies and the smaller companies. And as you know, or you might have heard, the top 5 companies actually make up 20% of the S&P 500's weight. As you remember, the S&P 500 is market cap weighted. So bigger companies have a disproportionate weight relative to the rest of the index. So it's important to understand that when people say that the market is significantly overvalued, a lot of commentators are chasing bigger cap companies because that's where the money is at. It's safer to go into a large cap that everyone else is going into compared with something that might be off the beaten path, because if something goes wrong with a stock that's off the beaten path, you will be an outlier, and if something goes wrong you're going to look not so smart. You might actually lose your job. So a lot of the large money is going to chase over S&P 500 stocks. So our opportunity as value investors is really to go where not many investors are willing to go. And not many investors are willing to go into smaller caps. So you can see here the large gap reflected above. So at this moment in time, there's such a lag that a lag represents trouble, a lag represents opportunity. So before discussing the opportunity, I believe it's important for us to consider what we're trying to achieve by investing. Investing is deploying capital today so that at some point in the future it's worth more. That's it. Buying something on the low side, over time, as the company compounds its earning power, the asset appreciates and you will be able to sell for a higher return. Now, when I talk about the power of uncertainty, you must consider from Wall Street to somewhere in Europe to somewhere in China, very, very smart, intelligent individuals, very hardworking, very determined, are trying to beat the market. They are all trying to forecast, to have a vision of the future. They're all very, very, very intelligent people. So they just cancel each other out. Ultimately, they become the market. In my mind, a slightly better game to play is to say, I don't know the future. Okay? So I'll say it differently. If you think of Einstein's quote of doing the same thing over and over again and expecting a different result is a sign of madness, the same here applies. You must not play the same game that everyone else is playing. You must say, I don't know what the future is going to be. The future is totally unpredictable. It is random. I just want to stack the odds in my favor as much as possible, while being cognizant that ultimately not every one of my companies is going to work out favorably over the next 3, 4, 5 years. I might have an idea, but the best analyst in the world is only going to be right 2 out of 3 times. There's a 33% chance that the best analyst in the world is going to fail. That's a John Templeton quote, and you can see for yourself with Buffett and the airlines, things got wrong. Will airlines recover? Will they not? He doesn't believe so. He may be right, he may be wrong. Same with IBM. He had an investment in a British supermarket called Tesco or Kraft Heinz, you name it. You and I are not Warren Buffett. Warren Buffett is one person in 7 billion. But we can still take a lot of what he's saying. The message is, put the odds in your favor. So as an investor, what I like to do is go to the balance sheet and just put the odds in my favor. I don't want a business that has too much debt, too much leverage. Remember, look at the current assets. How much cash does the business have? There's a lot of businesses that have too much debt. Don't touch those. Just, again, put the odds in your favor. Look for a business that has very strong free cash flow. I have a video on free cash flow. Remember, businesses that are asset light often, but not always, have a lot of stock-based compensations. Subtract out the stock-based compensation from the cash flow from operations. If you're looking at a software as a service business, SaaS business, if you're looking at any of the large tech cloud businesses, they pay their staff in stock-based compensation. So that gets added back and that bolsters up cash flow from operations. So subtract that out. Look for businesses such as cloud businesses that are somewhat predictable. You don't want to be paying too much. We'll come to valuations in a minute, but you must apply common sense. Showed you earlier in the video about small caps. There are small caps, not necessarily household names, but there are small caps that within their niche, they're doing quite well. They generate quite a lot of free cash flow. They might not be flavor of the day or the kind of thing you can talk about at a cocktail party, but they still do compound their earning powers. And you're just trying to pick a business that in about 3, 4, 5 years can be more relevant than it is today. Another thing that I want to mention is about valuations. If your business is growing at, let's say, 15, 18% and you're paying 40 or 50 times, I see a lot of this at the moment. That is not a great investment. Maybe an awesome company, but that's not a great investment. So, back to the opportunity. The opportunity is going into businesses that's kind of slightly out of favor. So, you might say, okay, I know certain businesses in hospitality. They're not cool businesses, but they're kind of ticking along, and at the moment they're just dead in the water. So that could be an investment opportunity right there. Again, I don't have any stocks in any of these businesses, but I'm just saying, for educational purposes, this could be something worthwhile. Within that power of uncertainty, I hear a lot of very good analysts and investors talk about the letter of the recovery from the global recession. Now, some are saying it's going to be W-shaped, some are going to say V-shaped, some say kind of a U-shape. It doesn't matter. Don't try to predict what the economy is going to do. Pick good businesses. Just stick to picking good businesses. Don't pay too much for a good business. Go slightly into businesses that kind of fallen out of favor slightly. Don't go necessarily into a business that has fallen 90%. I have done that and I've had some success with that. But that's a very, very, very difficult game. You have to have a lot of experience with that. What I believe is a slightly better game is just going to businesses fallen 20, 25%. There's a lot of those around at the moment. And just kind of try to understand. Read through the 10K, read through the 10Q. Go into the liquidity of those reports. Just type in liquidity and you can see how the business's cash flow potential looks. You get a very good sense straight away. So, in summary, the power of uncertainty is you saying, I don't know what the future is going to hold for me. The future is random. You can read some Nassim Taleb about that, Black Swan. There's a recurring thing there. You can look at some Howard Marks, and I hope you found this video useful. I'll see you soon.